Alright traders, I'm back again with another video, and this time I'm going to focus mainly on two pairs, the euro dollar and the US dollar yen. And this is the US dollar yen that we're looking at on the monthly time frame. And make note of this line here, this blue dash line. This blue dash line is going to be a strong resistance area for this monthly time frame as it's bouncing off of that area, which is the top of that Kumo. Now eventually I believe we'll break the Kumo, but I think a pullback is in store first. Now the pullback couldn't come all the way down to a few levels, but the 50% retracement level is going to be way down here, so that's a pretty good drop, and then the market will take off. So knowing that, I know this is a strong support level, a resistance level right now, and I know that the market, we'll look at this on a daily, and I'm going to show you something on the daily. The daily shows bullish because we're above the cloud, but it's showing signs of weakness with the TK crossover and Chico span getting ready to be below price, and you got price breaking below that level, that Kumo on the monthly, and then you can see what price is doing. Okay, so I took that as a sign for when I trade on the 4-hour time frame. Now yeah, I know that we're showing on the daily that this is a bullish market, but I'm also taking into consideration the support and resistance and all the signs of the daily time frame. Okay, because we got this crossover. Now we may not drop anymore, and then maybe price goes and you get the crossover, a strong bullish crossover. But I went to my 4-hour time frame, and that was bearish. Okay, now the thing about it was price broke that level. This is that monthly Kumo right here. So I know this is a strong level that I want to be looking at and possibly trading around. So what I saw was price break that level, but then price retraced all the way back to that level. And then it showed me that it couldn't break that level, and it bounced on that Kijinsen. So I got the Kijinsen bounce, and I have my stop loss way up here. You can see that level. That's a far stop loss, and you know, you guys have to do your stop loss based on your money management. Now you could put your stop loss in a variety of places. I'm not going over that right now. I already been through that kind of stuff. But what I'm going to do is move that stop loss way down here. But first I want to see what price is going to do at this level. Okay, because see, I see this is holding as resistance, so that's where we got into the trade. And that level held. Now will price bounce and then come up and attack that level again and then go? Or are we going to get that 50% retracement level that we're showing on the monthly time frame? So if we get that on the bigger time frame, then you're looking at more downside here. So I'll move my stop loss down, and I'll let myself get stopped out wherever that stops me out. I'm not going to let it come all the way back up on me though. So that's where I got into this. On this 4-hour time frame, you could see this TK crossover, very strong signal right here, and it was up against that monthly Kumo right here, and you could see that it broke that level. Now this strong crossover, we got all bearish here. Here's your Chiku span below price, price is below the clouds. You got a TK Kumo twist way up here. So this market is very bearish on the 4-hour time frame, so I took this trade. Now what I want to see, and I'm looking at my trade, I got 95 pips right now, but I want to see price close below this level here, and then I want to see this level become resistance, so that once the market gets below that level, I can move that stop loss way down. Now this stop loss doesn't need to be where it is right now, for sure. We'll move this stop loss way down here to this Kijinsen right here, but I'm not even going to allow it to come back that far. If price decides to start coming back that far, I'll get out of this market. Okay, but I'm trying to let this run because I can see the drop. I can see that drop, and I want to make sure that I continue to follow that drop on that monthly time frame, and I don't want the market to pull back on me and take me out, so I'm going to give it some room to breathe. Okay, since all this is very, very strong bearish signals on this 4-hour, I'm going to stay with that. Now a lot of times what you see is you tend to see, watch your future Kumo, and you're going to see a few things, and one of them is you'll see a flat top. Usually you see a flat top like this, and then you'll see the bottom of it curve and curve like a bowl, so it'll look like a bowl or a cup, and with a flat top up here. When you see that, usually you can see that market when it's down here, it's starting to pull, it'll start to go back towards that way. So it'll retrace, the market will retrace and pull back the opposite way. Now we don't have that development here. We don't have that kind of you know, we don't have that happening right here. This is not like that. So when you see that design, that structure, a lot of times when you're down here and you're in a trade and you're at a support or resistance level and you see that market doing that, a lot of times you may not break that level. Now I definitely would love to see this close down here. I can move my stop loss down to this candle, and I could even move it there now because I definitely won't want it to come way back up there. So we can move the stop loss down here. All right, and we want to see the market close down here and then start to move down there, and then we'll bring this stop loss down here, and then we'll be guaranteed 104 pips, is it? So that's where we are with that. That's US dollar yen, euro dollar, 4 hour time frame. Look at this euro dollar. This euro dollar is in this consolidated phase right here. It needs to break out of this area here to the upside, maybe. Everything is bullish on this chart. It's strong signals too. You got a strong TK crossover here. You got your Kumo twist right here. You got a Chiku span below, above price, and price is above the Kumo. This is a strong TK crossover, and you can see what happened. But like I said, no matter, every time you get a crossover, you usually get a pullback. So I don't play these crossovers because I know when there's a crossover, a lot of times I'll get a pullback, and then I can play that bounce. I didn't play this, and I'm looking at some other trades. I don't really mess with this euro dollar a lot, but I like this setup here. And now you can see the thickness here. This thickness is representing all this volatility here with this consolidation. So you want to see that to start angling up. You still have a little bit of momentum here showing. You're starting to die off. You're starting to die off. But that here you see that died off. That's showing no momentum. We still were going up, and now we're starting to flatten out with the Kijinsen. Okay, so we want to see price get above this level, which is roughly what, 1.309, and we're want to keep this level at 305. So if we get above 309, then that'll be a level that you may want to get into a trade. You could put your stop loss down here below this box, or else depending on how far this market breaks out of here, you can keep it a little bit below this level, because this level may be a support level and price may come back and bounce off of that level. Now it'll pierce through there, so look at these candles here, and maybe you put it on one of these closes or opens right here. All right, now because this is a big stop loss, putting it on the Kijinsen, and that's what the Ichimoku system designs for you, to put your stop loss down here on the Kijinsen, but that's kind of far from me a lot of times. So you have to do a more technical stop loss, and you use support and resistance. All right, so that's what you could do. You look at this level right here, and you can see how you see these points right here. You put a line here, and that will be a level for you, because this is going to be a support level right here. But this is based off of this bottom right here, like I was showing. So those are levels where you could put your stop loss. Always use your money management that is good for your trading size, your account size. If you got $1,000 in there, you don't want to risk $100 on your trade, because you're risking 10%, and you 10 losers and you're done. No more account. All right, so that's euro dollar. Look at this on the daily time frame. The daily time frame is not so engaging yet. The thing about the daily time frame, we want to get above this cloud. We're in the cloud right now, and we don't trade inside the cloud, but we're not trading the daily time frame. So we're just getting a market sentiment from the daily time frame, and right now it's neutral, and it is neutral. As you can see on the 4 hour time frame, it's doing nothing. It's consolidating. It's in that box. All right, so if we break out of this cloud here, there's levels to shoot for. You could put your levels so that you can see where the market may rise to. And let's see, this is going to be one level right here. We'll first put a level here, and then we'll put a level here, and then we look for the market to shoot to those levels and then see what the market's going to do. So you put your lines there so you could see where that's going to be. But that's basically daily time frame. Daily time frame is pretty much neutral, a little bit bearish, but with price inside the cloud, we're neutral. You still got a bearish TK crossover, and Chico spans below price. Really, it's starting to be inside really price, so you could call that neutral. And your future here, let's see, my computer don't want to act right. Your future is still bearish. You get that crossover. You didn't get it yet, so it's still bearish. And so you got pretty much bearish signs, but with price being inside the cloud, that's pretty much consolidated. That's neutral signal for us. So we are on the 4-hour time frame. Like I said, trends start somewhere. They start from the bottom up. So if we can get out of that cloud with daily, first we got to get out of there with the 4-hour. So the 4-hour is showing us, like I showed you, the 4-hour is showing us we're in this consolidated phase. So yes, we are neutral, but we need to break out of this level, and then we can look long for that. Anything in here, if you take a bounce here, you can take a bounce on this level right here and play it long, but you're just going to be waiting for it to break that level. Now a bounce on this level and play it long and wait for the break of this, you can put your stop loss down here at the Kijun-sen. So that would be another really good thing, playing the bounce of this this consolidation box that you're in. So in this range, you can get your, if you can get your entry down here, anywhere down here, and put your stop loss down here, then that's a pretty good risk reward ratio. Because if you break out of this box, and with this long candle here, this is a bullish signal, so you'll get this consolidation, and then you'll get the continuation of this bullish move. So if you can get your entry near here, okay, and then you have your stop loss down here, that's a pretty good trade for you. That's a pretty good entry. And then you get your targets where I was showing you on the daily time frame. So that's looking at Euro US dollar. I showed you this trade last week on the video, Euro New Zealand dollar yen. I traded this on the bounce the other day. From here I traded this counter trend trade and got, I think it was like 95 pips or something before we got down here. Now another thing that happened, we were in this range here. We were waiting for price to break outside of this range right here. This is a 4-hour candle, way too big for me. Price is extending way too far. So what I'm going to wait for, hopefully I can get a pullback close to this level here. If we get a pullback to this level here, near this level, then I can take this long. But this candle breaking out this far, I couldn't take it. Too far for me. Put my stop loss. If I get in up here and then price comes all the way back, and you know, that's a long wait. Why wait when you can just sit out and wait and try to get it at a better price, get a closer stop loss target? All right, and then we'll look, our risk, our reward is going to be based off of this here. Let's go to the daily first, and you can see the daily is all bullish. I just didn't like, the thing that made me think it wouldn't break above this yet is because how far it is from the Kijun-sen. So the thing that makes me think that even though it breaks, it may pull back closer to this level is because we're far from the Kijun-sen, and getting that far, we're getting out of equilibrium, like I said, and the market wants to get an equilibrium, so it's going to slow down and wait up, and when it does that, it'll pull back. So this may be another opportunity. Then you shoot for your targets. You look for your monthly time frame here. I'll be looking at a few levels. See, we're breaking this level here, this main level right here, and then we'll look for this level right here. So we'll put a line there and look for that level on your 4-hour time frame. Look for the price to go there. Now see, I'm a long-term trader, so I don't trade for a couple hours. I usually trade for a couple days or weeks. So you guys, if you're looking at this, this is still the same concept as if you're trading short term. The concept's the same. I just, the price range, the time frames I use allow me to make longer trades. All right, so that's the Euro New Zealand dollar. This New Zealand dollar yen does same thing. I'm going to show you guys, this is the same thing as the other charts, and you could do this with almost all the charts. Once price moves downwards, see, even if it's going upwards like it was on the euro dollar, you could do this, and you could see this all the time. Hold on here. You put this price in this box and you're waiting for it to break outside of that box. Okay? And once it breaks outside of that box, that's where you want to get into the trade. Now see, this is where we would have gotten to the trade here. And I saw this morning. I didn't get into that one because I'm in the yen trade. Alright, so I'm in the US dollar yen trade. But this one I wanted to get into because I really like this setup on the daily time frame and how far this could run. But if you would have got in on this candle, because this candle closed below that box, and this is the box of support and resistance where the market's consolidating in a little range right here. Okay, and then here's where you're running. You could put your stop loss above this candle because this is going to be your support level. But it's not that far to put your stop loss here now, so at your Kijun Sen. So when you got in here, you could put a Kijun Sen stop loss right there. Alright, that'll keep you pretty safe right there in case price reverts back. Sometime it pierces through that level and it'll try to search for your stop loss and boom, take you out. But here's the level since you weren't that far away. Now, say this candle closed way down here and you still got into the trade. This is all the time for this computer. But anyway, if price closed way down here and then you got into the trade and you put your stop loss a little above that candle because you're using this as your resistance, saying that if the market comes up here it's going to hold, okay? But you want to put it a little above because price is going to pierce that level and try to get your stop loss off of that candle. Alright, and so that's what that looks like. You got strong TK crossover here, very strong. Price is below cloud, Chiku span's below price and the cloud. There's nothing holding Chiku span back down here. And you got, look at the angles of everything. Everything is aiming downwards. Strong momentum in this market, very strong. Look at this. This is a strong run here, and this would have been a great trade to get into right there. And the last pair we're going to look at is the Aussie yen. Same thing, exact same thing. I mean, pretty much the same as mostly all the pairs that I'm showing you. We could do this all day long. Once you see this happen, that doesn't mean you missed your trade. If you see a run, wait for the run to stop and wait to see this happen. And once you see that happen, box that box in and break out of that box. So it's all breakouts. Now see, this candle closed a little below there, so you could have got in on that one. If you didn't, you would have looked at this one. This isn't even far because you get in on this candle here and then you could put your stop loss above right at the Kijun Sen, which would have been a good spot. Okay, so you put it a little above that Kijun Sen and then look what happened. Okay, so that's that. Looking at those pairs, those are the things I wanted to show you. I'm still sitting here. I need to break this level on this US dollar yen, so I'm waiting to see what happens with that. If it doesn't break that level and holds there, I'll probably take my profit and then see what the market's going to do. Then if it breaks that level again, because see, what it may do is what it's doing with the other pairs. Maybe it ranges in this level, so this will be the level from here to here, ranging. So I'll box it in, then I'll wait for it to break out low. But hopefully it doesn't do that. Hopefully this runs. Now you can see the momentum's not as strong on this pair as it is the other pairs, because look at my angles, not as deep. But see, those last two pairs I showed you, look at the angles. Look at this angles. That tells you the momentum of the market. You could see that. But look at this. Not a lot of momentum, but there's still good, some momentum, but not like the other two pair. Alright, so those are better trades. But that's it, traders. Just wanted to show you that these are things you can do all the time. No matter what time frame you're using, you can use Ichimoku for any time frame. Alright, eventually I'm going to show some scalping trades when I have time. So teach you guys how to scalp the Ichimoku system. It's a little harder with that, but you still could do it. Same concept. Everything's the same. So traders, hope this is helping you. Until next time, have a great and blessed trading day, trading week, and God bless. So long.